So you've had an amazing year, Hany. Just take us through some of the highlights of your year. It feels like you were involved in all of the successful IPOs this year.
Thanks, Bonnie. Yes, it's been a fantastic year at Acme. I mean, I think it's been a fantastic year for technology in general. I think many of us still have a little bit of survivor's guilt where we feel like everywhere around us, all the traditional companies, traditional businesses are floundering. People are losing their jobs, while in tech, we've been booming. Tech has created an environment where every month is like a dog year for companies. I mean, the last five months of what's been happening in the world has been like 5 years of technology adoption. I think the best illustration is that of my mother-in-law, my 82-year-old mother-in-law now ordering food on Instacart to be delivered to her home because of COVID. So that's the environment I think a lot of people in technology are feeling today.
Right, and it was a very quick change, and people who never thought that they would, modify their behaviors found that they were well able to modify their behaviors because many of these technologies were actually relatively simple to use. So, Hany, you're on the board of DraftKings, the Airbnb investment that you were involved in obviously was a huge success. Robinhood, Zoom, there are so many that have already sort of made it, if you like. But will those behaviors continue on when life returns to something akin to what used to be normal?
Well, I think the next normal is going to continue to adopt technology. It may not be at the pace that we've seen for the last 9 months or so, but I think technology is here to stay. People have learned how to use it. They've learned that their mobile phone is their next best friend. This is how they stay in touch with family and friends, and this is how they order food and basically commerce. And so I think it's here to stay. Now, it's not going to be at the same rate as it has been for the last 9 months, but it's going to continue. So I think you're going to see a lot of momentum shifting as well. I think people are reprioritizing how they work, way they work. I don't think we're all going to end up going back to the office the day that we get the vaccine. I think there's going to be a process where life may be a little bit more balanced.
How many of the companies in your portfolio will come out the other side unharmed? And I'm thinking not of the ones we've already mentioned, but companies like, for example, Rent the Runway.
Sure. So look, I think you talked a little bit about what's been happening in technology and the liquidity that we're seeing. I think a number of companies are seeing a lot of money being thrown at them by growth equity investors, by the public markets, because technology has been one of the few places that you can invest. So even the ones that are struggling have a lot of capital to survive the storm, and they'll come back on the other side. In terms of what's been happening on the liquidity side of venture investing is that SPACs are here. I call it the SPAC attack. SPACs are here to stay. For 3 or 4 years ago, they were the backwaters of liquidity, but today they are almost front and center. If you're not a big tech company, meaning you're a $10 billion, $20 billion company, it's been very difficult for you to find a way to go public. You have to have scale and size in order for Goldman Sachs or Morgan Stanley or any other big investment banks to take you public. SPACs have really kind of changed the way we think about it. It's kind of gone back to I started my career in the 90s, where you had the four horsemen, Robinson, Stevens, H&Q, and others that would take small and medium-sized tech companies public. And that was the way that you raised, your $50 to $100 million funding round to continue to grow your business. Well, the last 10 years, that's all kind of gone to growth investors. Mm-hmm. Now you're seeing SPACs come back and take place of that, offering better valuations, more liquidity, and frankly, just much more interesting environments for the smaller smaller tech companies.
Sure, and that's what people who are fans of SPACs say, right? They continually suggest that it's much better for these private companies to be attached to a good sponsor who can lead them through the IPO process and get them there faster. But do you have any concerns that there are too many now? There are too many funds looking for targets. The SoftBank one just announced today. Are the targets out there, and will all of these SPACs succeed?
So, great question. This has been my concern for the last few months. However, every single one that I've seen that it's engaged with our companies right now, a number of our companies are under engagement with SPACs to go public in the first quarter of next year. Hopefully, the market holds up. Now, the issue that you're seeing that I've seen so far is that most of the SPACs that I've been involved with or have seen around us have been high quality sponsors. These are people that have been in the technology business for a long time, or operating business for a long time. and they're actually truly adding value to the portfolio companies. When I start to get worried, it's going to be the lower quality sponsors trying to go after these companies. You know, if you take a look at how the IPO markets open and close, the windows open and close based on the quality of the IPOs that are coming out. So if we see a deterioration in the quality of SPACs, I think the window will shut on SPACs for a while until you see higher quality names come back. So that's something to keep your eye on in terms of the quality of the SPACs, how often, how many of them stay above issue price, how well they do in the PIPE process, how well they do in the public market process once they go public. That, I think, will be a determiner of whether or not SPACs are here to stay or if they're going to be more consistent than the IPO.